Hi, everyone. It's Anthony Caporrino. Today I'm here with my partner, Jeff Shaffer. Jeff is a partner in Alvarez and Marsal's private equity performance improvement group, and he spends a lot of time in the sports and media space on the operational side. So today we're going to be talking about PE interest and investing in the sports and media space. So, Jeff, before we jump in here, why don't you give us your background and then we'll dive into the conversation?
Yeah, thanks, Anthony. This is really an exciting time, by the way. So I've been with the firm for 14 years, been doing consulting for a lot longer than that, but for the last 5 years, been focused pretty exclusively on this intersection of sports media, entertainment, and private equity. And on the sports side specifically, um, we've had really a hockey stick level of growth in terms of activity at A&M and just kind of in consulting in general because it's such a hot asset class. It's probably the hottest asset class right now. Just every day you read more and more about private equity and private capital in the space.
I agree, Jeff. So why don't we get into the subject matter? So, as you've said, there's definitely been over the last several years an increased interest by private equity into sports and media investing. What do you think has driven that shift in focus that we've seen?
I think it's a combination of like a couple of factors. If you think about just the 2.5 trillion global industry of sports, that's just fascinating. But what historically has been a business, an ownership structure that has been regulated by the leagues and the government for the sake of nostalgia to keep ownership to a single individual has shifted. It shifted in Europe ahead of the United States. In 2019, suddenly Major League Baseball was open to private capital and private equity investment or institutional investment. And I think you have that, and plus you have like such an unlocked amount of value. Um, like traditional institutions, like banks, like have not really looked at the leverage correctly. So there's so much unlock that could happen. Like these are like 10% loan to value, and there's so much untapped value that can be pulled out. And then the valuations of these sports teams have just grown at staggering levels. And there's just this gap of what you can do with that value that suddenly is interesting to institutions. And finally, the leagues have finally woken up and they're allowing that investment. So it's just like a perfect intersection.
Yeah, I would agree. I think if you think back to what you said, the individual ownership, many times it was somewhat of a vanity purchase on the part of very wealthy individuals. And clearly with all of the factors you laid out, certain leagues opening up and offering up the opportunity to private capital, that's definitely made it interesting in an area of focus. When you get down another layer, and you alluded to it just now a little bit with just the ability to drive value from a very vast market. But what are some of the fundamental attraction points to the area of sports? If I think about it, for example, there's certainly media rights you could monetize, but maybe along those lines, what are some of the other value drivers that you alluded to that fundamentally as an investor are attractive?
Yeah, I think you nailed the first one. So let's just pause on the first one because you got that one right. $60 billion of media contracts. Like right away, that's interesting because those could be monetized in lots of different ways. Then you have this ever growing, high valuations. So you without doing a whole lot that these assets just continue to grow in value in terms of purchase price. So you can milk those out. They're under leveraged, so you can borrow against them. And these things are expected to grow, $100 billion in value to double year after year. Then just within any single investment, ways to monetize it on the revenue side, fan engagement, sports betting, merchandising, food and bev, stadiums, so many different experiences, and it's scarcity. Like nothing else in the universe is as scarce as like a winning professional sports team. And they're not growing more of them. Like, sure, National Hockey League will expand by maybe 2 teams next year. Maybe we'll see. But that's sort of it. So it's a very limited space, and it's the last sort of natural thing you can do. Like it's an engagement. It's a real thing versus AI or anything manufactured. This is real. Like sports is happening.
So continuing with that theme of just some of the drivers, and when you think about sports investing, you think inherently, I think your first instinct is to think about professional sports teams, and you've talked about some of that. But we have seen in our business, you and I, some of the focus on amateur sports, college athletics. Even those are very much fast becoming an area of focus and interest. So how do maybe some of the amateur leagues and the college athletics either have some of the similar characteristics or maybe are valuable but in different ways?
Yeah, so that's the other thing we're seeing that's so interesting. So name, image, and likeness, NIL, in college athletics has obviously changed the landscape of sports altogether, which is fine because that allows for more democratic profit sharing for the people who are actually putting their potential professional careers on the line to play at an amateur level, which is great. That's sort of an aside thought. But, you know, if you think about football, which is really the number one driver of revenues for universities, followed by men's basketball. Those have not been monetized, and institutions can suddenly figure out ways to monetize that. We saw that, like, in the news, University of Utah potentially privatizing their athletic department, sort of the first domino to fall. Private capital or private equity coming in there can actually professionalize that, can give liquidity to institutions that want to build a hospital, that want to do other things that they haven't been able to do before, but now are getting, cash up front. Then take it down another level. Um, you know, High school athletics and things like that are so popular right now. If you look at what's going on just with Dick's Sporting Goods and their incentive programs and how they work in order to fuel the fandom for, kid athletic programs, it's this entire ecosphere, which I think is actually is sort of healthy in a way, that people are outdoors, people are doing athletic activities, as long as we keep the parents in check, which is okay. But there's no limit to what parents will spend on their kids' athletics, period. So investors understand that. As long as there's
Yeah.
proper governance on it, it's just going to be a great thing.
Yeah, I think you bring up a good point. You've seen it in other industries. For example, people spend unlimited amounts on their pets, and that's become a big industry for private equity, whether it's daycare for dogs or ancillary services around animals. But there's a recurring and predictable revenue stream that necessarily is not limited by inflation or some other economic factors. I think you hit it on the head. Kids athletics is the same. People will spend on their kids, and therein lies a huge market for that to happen. And we've seen that on the youth sports side. When you turn to your individual time and focused on operational performance improvement, when you look across these various athletic landscapes, whether it's a professional team, uh, amateur, kids sports, what are some of the common operational levers that you can pull on to improve performance? And maybe without naming names, you could talk about some of the experiences you've had where you've had to really come up with an operational performance improvement plan alongside the investment thesis within these athletic opportunities.
Yeah, I think a lot of these have grown up organically and they haven't been professionalized. And we're involved with professional sports teams in the Big Four. We're involved with live entertainment. We're involved with other type of sports that aren't necessarily leagues. And the common theme is because they've built up organically, they've created heavy people organizations to get things done. And they sort of have failed to step back and think about like, well, how do we introduce automation? How do we think about possibly having AI agents helping support that work? How do we think about control environment to look at procurement and sourcing? Because they're trying to produce a really good product and they're sort of ignoring the back office elements of it. Things you can't control, like in professional sports, we can't control salary cap and things like that. But we can control being more efficient even on the front office. We have a number of professional sports teams that are coming to us, not just helping us think about G&A or thinking about automation, which are huge levers, or sourcing, or just their general structure, which are all great levers and produce results quickly. But like, can you help us with the front office? How much should we be paying managers, general managers? How should we look at how we think about scouting? How should we think about how we interact with our minor league teams? How should we think about stadium, food and bev? Like, all those things are potential levers, and we're lucky that we have a lot of the benchmarks and experiences in it. But those are all things that you can just turn the dial, and if you measure things in terms of EBITDA, you can start to chip away at that.
Yeah, interesting. I guess as you look at these types of opportunities, do you feel like your functional experience is applicable in the same way, but the industry now is different, or do you have to develop, say, new functional experience given it's now a new industry, sports and entertainment, that prior to a few years ago you really didn't take a look at?
Like it's a mixed bag. Like, some of the levers are like normal levers, like how efficient are you in your accounting department, AP matching, but that only sort of takes you part of the way. So no, we've had to really sort of retool in how we think about things. Like here's an interesting fact. Like 90% of Gen Z consumes their sports through social media. Okay, well, that's not something we were really thinking about 5, 10 years ago. But as we think about, like, okay, revenue lift, how do we think about, okay, we need to hit that audience in a different way, because that's how they're going to consume the content that sports teams are putting out there. And if you go to youth, same thing, right? When we were growing up, it was just a whole different experience. We didn't have, our parents with iPhone tools measuring our stats. Schedules were taped to a refrigerator. Like, that doesn't exist anymore. There's just a whole new set of tools, and we've had to make sure that we keep up with how we interact with the people who are consuming or participating in athletics.
Interesting.
Whole new world, man.
You've spent the last few minutes talking about opportunity and different ways to improve value. If we sort of flip the conversation, when you look at the industry and some of the work you've been doing, where do you see the biggest risks, and maybe what are some areas that private equity investors are underestimating in terms of general risk, and where maybe some of the errors have occurred?
For sure. I mean, you still have to produce a good product. Like, number one, if you look at some of especially baseball is a really good, Major League Baseball, where it's a haves and have-nots. You see so many empty stadiums. So fan attrition is a big issue. Maximizing stadium operations. If you don't know how to maximize, the inflow, outflow, food and bev, merchandising at the stadium, you're leaving a lot of money on the table. There's a big issue with pricing out fans. And by the way, that's just not in event fans. That's like streaming fans also. Like, it's very difficult, even though ESPN like has a guide to like find my game. There's going to be a certain point where if you can't find your local team because you're trying to get through 5 different streamings and pay-per-view and Netflix, there's a risk of just like we've oversaturated the streaming and fans walk away. And then there's the last thing, which we don't talk about enough, but I think it's a big issue, is just reputational risk. Like you've got to, you're signing these $100 million athletes. We saw it with the Dodgers with like the betting scandal. There's always risk of like something like that. A Me Too event can easily crush valuation. You have to be cognizant of that. It's a human product as opposed to something coming off an assembly line. And if you take that for granted, you're going to be you're going to be potentially exposed.
Yeah, that's a great point. At the end of the day, there are people that are the product, and it's unpredictable, and you're right. Little actions can have drastic ramifications depending on what happens. On the flip side, you can probably say that some achievements that are normally in a business that help can really multiply value in ways that a normal product and just product performance generally could not.
I mean, I always talk about this, and people are probably sick of me talking about the Caitlin Clark effect. But one great athlete can like change an entire sport.
Hmm.
And there's a lot of pressure on what is like a 26-year-old woman to be responsible for carrying all of the WNBA, but like that's changed the nature of that sport.
Yeah, that's a great point. So we've covered a little bit of why investors are now interested in this space and what's opened up. We've talked about the areas of value that you can unlock. We've talked a little bit about the risks. Maybe lastly, as you think about where we are today and looking forward as the industry quickly evolves, in your mind, what would be the three most important things an investor should consider as they analyze and think about investing in the space?
I think one is if you're over focused on just male professional sports. So I would think about youth and women's sports, number one, overlooked. Like women's sports, $2.5 billion industry, viewership has tripled the last few years. Like there should be focus there. The loan to value disconnect is amazing. Like the 10% versus like 70% in other industries. Like trying to understand where your leverage is, and if as long as you're not over leveraging and crushing the business, that's interesting. And then the third one is AI is a really interesting conversation because on one hand, sports is sort of structurally won't be disrupted by AI. Like no one's going to watch AI, NFL. Right? That doesn't happen. Like no one wants that. But there's so much new technology out there that will disrupt the way we consume, like predictive highlight reels, packaging up content in a way that the consumer wants it, that AI is going to be super helpful. And there's a lot of opportunity there. Just understanding how that may come into play will be really important.
Interesting. Now that I'm thinking about it, there's one more area that we could perhaps touch upon, and you briefly mentioned it before, but betting and gaming.
Oh yeah.
How do you see sports? Clearly, they're connected, and now a lot of these professional leagues, where in the past they've shied away from even being associated with any type of professional gambling, they're now embracing it. Most of the gambling companies and betting companies out there are sponsors of these leagues. How do you see that as either a huge growth market and benefit, or do you view that as perhaps a risk, whereby you mentioned before, human action can drastically impact a valuation just based on a maybe poor decision? I would think that perhaps that same type of risk exists with associating with these professional betting companies, but what's your views on that, and how do you see the two interacting with each other going forward?
Super complicated question. So sports betting's here to stay. Full stop. And it's a growing market. And there's tons of risk we all know about with sports addiction and underage betting. And then obviously making sure the athletes remain pure. So I think that horse is out of the barn, and it's going to continue to grow. I see there's regulation about predictive markets on sports that's trying to be pushed through Congress. That'll be interesting. And it just has to be the right governance on top of it, because as soon as you asked me about risk, as soon as the fans feel like it's rigged, like it all goes down the drain. That will be a huge disruptor. And we're always going to find one-offs. There's going to be someone that rigs a game somehow for some reason. So there just has to be really good controls in place, or else the whole thing could crumble.
Yeah, it's fascinating to watch, and certainly, you see an entire industry opening up before your eyes, creating all kinds of opportunities, and it's been good for private equity in a very short period of time. It's been good for us as we start to get involved with these opportunities and assist our clients in the space, and we kind of are navigating new territory together. All right, Jeff. Well, thank you very much. It's been great to spend time here and talking about this topic. I think your insights are quite valuable, and you have a unique point of view in the market. So I appreciate you taking the time, and hope everyone took something away from the conversation.
It's been my pleasure to talk about it. We're very passionate about it here.